Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, we're going to be doing something a little bit different here on YouTube today. We're going to be going back and having a look at Gamestop Corporation, GME. I haven't looked at this in many months. Things got a little crazy and it essentially stopped being worth my while with some of the fanatics in the comment section, some of the abuse I was getting simply for expressing my analysis. But I think cooler heads have probably prevailed now that we've had a year's worth of corrected price action. So what I've decided to do is to just start from a completely naked chart, work my way through it and build a account from scratch so you guys can observe how I work and how I put things together. And this is the kind of thing I would normally do on a live stream for charts that people have requested on the Discord, or it's the kind of thing I would normally do as a Patreon exclusive. So trying something a little bit different here on YouTube. If it's well received, then maybe we can do some more stuff like this in the future. Now, I was originally planning on looking at AMC as well when I recorded this video, but I've now gone back and re-recorded this intro because I went so over time during the video that I only had time to look at GME. So I'm sorry if that causes any confusion while I'm talking about it during the video, but perhaps we can look at that some other time. Now, before we begin the analysis, however, a quick word about the many benefits of becoming a member of the Green Star Trading Patreon. If you already appreciate the work I'm doing on YouTube and wish to show your support for the channel, then why not join Tier 1 for just £5 a month? You still bag yourself an exclusive video each week that won't be available on YouTube. Or why not consider joining Tier 2 for just £10 a month? You still get the same exclusive video each week, but you also get access to the public Discord. There are multiple channels where you can discuss things to your heart's content on multiple subjects with all other Discord members, including myself. You also get access to the entire back catalogue of my educational videos, including the Elliott Wave series, plus other technical analysis videos, including trading and trading risk management. I also host a live session each week via private link to the YouTube. Then finally, Tier 3, for £15 a month. You get all of the previously mentioned benefits from Tier 1 and Tier 2, but you also get access to my monthly dividend calendar where I list my stock picks for the month and all of the relevant ex-dividend and payment dates. You also get access to my stock rating system, which is an at-a-glance rating out of 30 based on company health, value and overall dividend quality. If you yourself wish to look up a specific ex-dividend date or payment date, tag me on the Discord and I can look it up and get back to you. Also, if there's a stock you're interested in and you want me to use my rating system on the stock that you have chosen, tag me in the Discord and I will get back to you with a score. Thanks for listening, guys, and now back to the video. Okay, welcome back, guys. So we're going to start here with GME, Gamestop, on the weekly time frame in our arithmetic scale. And before we start building the count, we're just going to have a quick talk about price action in general and what we can take away from it. Now, I've come back to GME and it's been a significant break. I was covering it weekly almost on the channel when all the hype was around it, but I honestly ended up deciding it wasn't worth my trouble. There's a lot of fucking crazy people around at the time, to be absolutely honest, who pretty much lost their senses or lost the plot. And they were taking perfectly unbiased technical analysis as some kind of personal affront to their beliefs. I even got some hate mail, believe it or not, from some people via email and that, just because I said, you know, we topped. And I've likely got some serious correcting to do for a few years or months or years. And that did not seem to go down well with some of what was, I can only really be described as fanatical people at the time. Now, that's the point I want to begin with, which just because something's gone up and it has now crashed a certain amount doesn't mean it's going to zero and it can't go higher, and it doesn't mean, well, it will go higher. I couldn't care less about the motives of individuals for buying this thing. And that's probably the reason why I've let it cool off for a fair old time, because I'm convinced some people had lost the plot completely. They believed they were some part of some kind of I don't know, some kind of revolution or something. You're not. You're just buying an equity, mate. So yeah, getting back to reality. The first thing I want to start off with is looking at the size of this. We've just shifted into log, looking at the size of this move, and therefore drawing some logical conclusions before we start practicing Elliott wave. So let's have a look at the move from March 20 through to January 21, and we have a 18,549.97% move. Now, me as a Elliotician, and what we teach on the Green Star Trading Patreon is we have I put out a video a few weeks ago talking about time scale and wave degree, and it's a pretty simple conclusion to make that an 18,549.97% move is going to take a fair old amount of time to correct. Okay, that's a big move, and that is going to take what you don't give up in price, you give up in time, as I'm fond of saying. So it's going to take a fair old time to correct an 18,549.97% move. Okay, that's number one. It's always going to take longer than people suspect it will. Okay, because when you're caught up in the hype, and a lot of people were, you think it's going to moon forever, and you think it's going to moon now. Well, that's not how markets work. That's not how they've ever worked. They step up over time, and they can make some pretty biblical moves, but those biblical moves get corrected, and that's when the shakeout begins, and we won't carry on any previous trend until the shakeout ends. And time will eat up, as it does because of human nature, all of the things, all of the potential sales until it's over. You know, whether it's people losing interest because it's not being reported in the media anymore, whether it's loss of interest because price is moving sideways, whether a new fad comes along or a new bandwagon for the public to jump on, whatever it is, time heals all wounds and time corrects all prices, and you just have to wait for an opportunity. So I feel now, a year on, we can come back and see how much correcting this thing has done. It may have a lot further to go yet before it finally bottoms out. It may be close to doing it now, so that's what we're going to try and do. So that's the first major point I want to make, is corrections take time, and when you're correcting almost 20,000% move, it's going to take a long time. Right, so now let's look at the overall structure of this thing on the weekly time frame. So we have a free wave move from a high to a low. The first problem we face is that it's a lower low from where the price IPO'd back here in 2022. So the chart does not give us the luxury of saying 1, 2 off of the price data that we have available to observe. So we can't just declare this as the 1, 2 of an impulse. Now, you could say pre-IPO price, we come up like this, and then we go A, B, C, or WXY, or whatever it is. Then we can say 1, 2, but we don't have the price data for that. So what we're going to do is we're going to initiate our count from this low here, because that's where we have an impulsive move off of a low supported by enormous amounts of volume, taking us up 18,000%. So let's just look at this in arithmetic scale for a minute and zoom in on this free wave move, just so we can put something down at the low to begin. Now we've got a swing high here that retraces roughly 90%. Maybe not quite, could just be a deep zigzag. So you could label this ABC either way, and I'm not going to stress over it now. A, B, C could be 3, 3, 5 here as a flat, or it could be 5, 3, 5 as a zigzag, since it didn't quite make 90% by the looks of it. So as far as strict rules go, we wouldn't count it as a flat. Okay, so let's shift back into log, and now let's have a look at moving off of the lows here. This is the lower low. So eyeballing it, the first thing you're going to say is that this is a 1, and therefore the next dominant low is a 2. Let's move 3, 4, 5 up here for the moment. So this is our first wave degree. So this took, let's come down to the daily time frame. So the initial impulse off of the low lasted 11 days. Okay. And the subsequent correction to that 11-day move lasted 97. Okay, so like 9 times almost. 9 times the amount of time it took to get up there in a 1 and a 2. The correction was roughly 9 times the length. So let's change this to intermediate degree. 97 days doesn't feel big enough for primary degree, so let's just shift this into intermediate degree. Which means from this point we're now working on some kind of subwave to this high here. Okay. So we could put the 3 up here and suggest that this huge powerful move supported by volume was a wave 3. Now at that point, if we switch back to arithmetic for a minute, we can see how skewed things appear. 1 of the 2 is barely detectable, 3 is on the moon. So that's why we're shifting to log, so we can observe some structure here. So even if we take up measurement of the wave 1 from our projected wave 2, we can see that even the most extreme measurement of 423.6%, the highest target we would normally consider for a wave 3, we go significantly beyond it, and this is in log scale. That's how extreme that move was. Now it doesn't make any sense in arithmetic scale at all. Obviously 423.6 of that 1 is all the way back here, but this is the first move we can see. Okay, so an alternative idea would be to take a target for the wave 3. Let's come back here and zoom in and count our way from there. So we could say this is a 1, this is a 2, we have another impulse here, and then we have another correction here. Now this could be 5 waves into a zigzag and then an extension. This could be a 3-wave move here, A, B, C, likely looks like a flat, and this could be another 5-wave move up. It looks like a potential triangle here. This comes to the 2, 1, 6. So we could take our 3, which we're going to have to do in log here, and bring it back to what becomes the 1618 in log scale. So this now suggests one or two things is happening. Okay, which means that all of this is primary degree into a 1 now, as opposed to a 3. Now we'll consider both options, but they seem so extreme, even in log scale, that to pull a 3 up here related to this pivot seems a little too much. Whereas if we come off of log, we can see that this is around the 3618. A little bit below it, it's around the 2618. This is the 3618, so even this could be the wave 3 related to this, although I don't think it is. At first glance, I'd say this is a suitable assumption. We can look at the time frame and then work our way up from there, but we're going to have to do most of this in log anyway, just to try and make sense of it. So somewhere between the 2618 and the 1618 in log potential target for a 3. So what that helps us decide is that we can now take our 5, put it right up at the top here, and we can now say, okay, if this is intermediate degree, and it doesn't have to be, it could be smaller, but when we look at the scale of this correction, which is now a year long, that feels sufficient, at least so far as it's not complete, to say primary wave 1. 2's not in yet, 3, 4, 5 much higher. So will the hype return is the question. Right. So is this an extension in a wave 5? Well, if we're going to count this as a 3, we had a flat pattern here potentially, didn't we? That would be a running flat. Doesn't seem to be sufficient in scale, so that could be it there. We could probably get 5 waves in here. So what is the length of this? This is 54 days. And this was 97 days. So at the moment we have to decide within this wave degree whether we want to consider a 360-day correction to have a closer relationship to a 97-day correction, or whether we want to consider a 53-day correction to have the relationship with this. And I think that's a more reasonable assumption. Okay, comes to a fib target. It's the third wave here coming up into the first wave at a larger degree. Okay. Right then. Now, can we get any kind of geometry at all which supports what we're looking at here? Now normally I would do this kind of thing on a live stream, doing work from scratch, or I would do it on a Patreon exclusive, but I figured a little change of pace, people might be interested, they might not be. If this video flops, I won't bother doing this kind of analysis again on YouTube. I'll just cover my usual assets. Okay, so right to the extreme outer bound of this pitchfork is where we peak. We come back in within the pitchfork for this high, we come back to the median line for this high, we come back to the outer bound for this low. So we've been stepping our way down here basically, extreme outer bound, median line, and now that pitchfork's broken completely. So whatever we finished up here this is now part of something larger. So I'm happy with that. I'll leave this in place, hide it for the moment. So I think a wave 5 extension is what we dealt with here. I mean, I think that's pretty self-evident that this was a FOMO wave, I like to call it, where retail pile in. Wave 5s can often be weaker depending on the amount of retail involvement. You know, wave 5s can even truncate below the 3, but if there is going to be mass public speculation on an asset, the public are always the latest to anything, so it would make sense that the wave 5 here, given the short squeeze situation that occurred, was a blow off top. So all I'm saying is it just went completely mental. So let's come down to the 4 hour here, try and pick this apart. So I think I can see the 5 waves down necessary here to get my C wave. I'm not so sure about this here getting a 3 wave pivot, but I think you could probably say that's one with an extremely long C, easier to pick out than the impulse I think here is. It's 78.6% retracement, and this was very extreme. Have to be a zigzag if we were going to look at it as that extreme. How's it look in arithmetic? This is the problem, having to come back and work like this. So what does that B wave expand to if we're going to say it's a B wave? That could be too much to tolerate, that could. Comes to the 1618. Golden ratio here extended as an extension of the A for a B for 5 waves down and a C. I mean, this is a bit of a judgment call. How strict are we going to be with ourselves here, dealing with this exponential explosive asset? That kind of looks like a diagonal, doesn't it? We'll have a little measure of that and see if we can make sense of that, because that's curious. Get a third, a fifth and final wave up here as a diagonal perhaps. I'm not sure how long that freeze going to be, if it's going to be long enough. 1, 2, 3, 4, 5. I don't know how long this video is going to take. I said I would look at AMC, and I will, but I might not get the opportunity to go through it like I am here with GME, as obviously I don't want people getting bored out of their minds. So looking at this length of this one, let's have a look at this 3. The 3 is longer, so that's not a problem. Seems to have a diagonal in the 5th, so even in arithmetic scale here, it's difficult looking at this move. You would have assumed, because of the way this comes up to here, you would have assumed that this move was shorter, but it's not. It's actually bigger than this move. Shorter in time, but bigger in length, so it is big enough to consider to be a wave 3. Might be a triangle here, perhaps. I'm not sure. That looks like 5 waves within it, subdividing. So we'll throw that on there for the moment. Okay, what's the subdivision like here? That's a 3-wave flat to there. AB doesn't look like 5 ways, so it's probably WXY. Probably a combination. So we're going to have to come down to 2 hours here, I think. And scoot our way all the way back to this. If there is a zigzag in here, I can't see it. Is it now? Okay, come down to 1 hour. Still can't detect the zigzag in here. What if we move the 4 to here? Is that a lower low? It is a lower low. Alright, so let's move the 4 to here. That could be flat. 3, 3, 5, and this could be a zigzag. So then we go a zigzag to here, a zigzag to here, zigzag to here, zigzag to here, and a zigzag to here to get our 3, 3, 3, 3, 3 ending diagonal. I think that's the... I'll go with it for the moment. I can always come back and fiddle around with this later. Okay. Save the chart now. So that gives us this, for people who are not familiar with Elliott wave, this is called a diagonal. I guess most people in standard technical analysis would call this a rising wedge, which is a bearish pattern because it always tends to break down quite violently because it's either occurring at the start of a pattern as a leading diagonal or is finishing a pattern in a 5 at the end of a pattern called an ending diagonal. I've got a video on the Patreon which takes all of the traditional TA patterns, head and shoulders, double bottom, triple bottom, cup and handle, double top, triple top, rising wedge, falling wedge, triangle, pennant, all of these patterns, and explains them in Elliott wave because that's all they are. They're just Elliott wave patterns, and people draw trend lines around them and then give them a name. But essentially, that's what we're looking at. Okay. So we're here in the 3 and the 4, and we're still sticking with this as an ABC flat for the moment. I'm not a big fan, but I've got to have some kind of relatable time frame to this wave 2 that isn't a year long. Okay, because I think I'm really pushing it at that point. This looks more like an impulse here than this does. It could be another zigzag, or it could be that 5. I can always come back and reconsider. We got a 1.618, which is about as extreme as we want the flat to get. We don't really want it to get any more extreme than that. But given the market we're dealing with, we can give it some leeway. We come to target here at the 1618. Okay, so from here, let's have a look at the overall move. A from B gives us a 130.18 to the tick, which is one of our running flat targets here. A 1618 wouldn't have even created an expanding flat. Now, running flat's rare. As a rule, it's more likely to be a running triangle, but there's definitely no triangular structure here that would be legal, so we're going to stick with that for the moment. Like I said, we could always reconsider. We didn't like the length of this ABC within the B at all. It was extremely long, but we can live with that for those zigzags. C's can become extremely overextended, or they can be extremely short. We just expect it to go beyond where the A completed. That's the primary expectation. This would therefore be 1, 2, 3, 4, 5 in our C. Don't read too much into that, as I'm just working through it as I go. Okay, so we're starting to get some kind of structure in here now. Now I think we just go 1, 2 again. That would be the easier guess inside of the 5, right? And then it just subdivides further as we climb up this insane run. So I think we have to go into log here to get this to work. Okay. So this is a 1, 2. I don't think we're going to get any kind of geometry that makes sense here. Snagging around the top of it and breaking it and just never coming back. You're not going to get a channel around this move either. It's just absolutely vertical. Okay, let's not move that. Let's just try and get the 3 to move a little higher. Okay. Could that have been a triangle? A running triangle? Bear with me, I'm just thinking aloud. So it would be A, B, C, D, anything like that. You can't get a wave 1 beyond that then if you use that as a triangle. So that just looks like 5 waves, not 3 for a start. So not a very good candidate for a triangle. So we're going to step down a wave degree into minor degree here for a 1 and a 2. That is the lower low there. 3, 4, 5. So we're in log scale now, so let's just take the Fib extension tool and see what kind of targets are believable for a 3. Here's a 1618 in log. So this is huge. In arithmetic, once again, it just goes up a notch to the point where it's not really of any use to us. So I think we just have to work with log scale here and just keep thinking that it's the 5th waves that are extending. So it's the 5th of the 5th of the 1 which has got the extension in it. So that's fine. We can say 3. Now that could be a triangle, because we've got a running B here. A running triangle is far more common than a flat. Running flat, that is. And then all of the remaining extension occurs within the 5th of the 5th of the 1. And that gets us to the high. It is not pretty at all, is it? So there we go. We've got a descending trend line there and a rising one there. So we're going to get an expansive B wave in a running triangle. A, expansive B, C, D and E. There we go. That'll work. And then it's all extended from here. We're going to have to come down to the 15 minutes to try and break this down. Okay, so now things really start to go cuckoo. So stepping down the wave degree again. This is 1, this is 2, 3, 4, 5, down to minute degree. So we're already ending up with corrections which are larger. Well, I say that, we're in log, so you never know, it's difficult. So let's compare this wave to was only 23%, which is pretty shallow. And let's compare the initial wave 2 off of the high back here. Now that was 41%. That's not exactly a deep one either. What about this one? That's a 31%. You're just not getting retracements, are you? You're just going vertical. So this could be complete nonsense, but it's just the best I've got to work with at the moment. So this has to be the 3 as a zigzag, so we can have this as another triangle or a flat. Looks like it could be. Oh no, we've got this here. What on earth is that? I can't. So it can't be a triangle. So that's got to be the 4. That's got to be the 5. This has to be a or WXY maybe. I don't know. Maybe it's here. We've just got a huge gap in the chart, haven't we? Which we come back to fill. So that now becomes ABC. Doesn't retrace enough to be a flat. But it's got to be, hasn't it? And then this is 1, 2, 1, 2, 3, 4, 3, 4, 5. I think there's no way of doing, you know, putting the price in there. So we're just going to say 1, 2 here. Have to imagine the subwave degree being here somewhere. That would be the 3, 4, 5. At minuet degree. Okay, we've topped. We've got a top in place. We worked the way up here. It's not beautiful, but it'll do. That's an idea. So the main exercise of, can we get an impulsive move off of the low to the high? Yes, we can. And therefore we can make the assumption that all of this is a correction to a primary wave 1, which when you look at how extensive it is, kind of makes sense. Taking a nice long amount of time, which you could argue makes it feel a bit like a wave 4. Wave 4s are notorious in length. Right, so now we've got to get ourselves through this in a way that makes sense. Back on my daytime frame. First thing I want to know is what we retrace from the high. We don't make 90%, and we don't appear to have any impulsive move from these highs down. Not clear, so I'm going to negate a flat. So what's most likely? Oh, okay, so this will be A. This is not an impulse, so all of this is B. Got a series of lower highs, series of higher lows, so this is a triangle, which means C is going to be down here. Okay, so I think that looks pretty clear, I'd argue, as a triangle. Right, so that's a single move. That's a single move, and then this will be a single move. So, gotta come back to the 15-minute here and pick our way down because we need an impulse out of here. I think that's doable. It's not going to be particularly clean, but I think it's there. 1 ABC into a 2. This is going to be maybe a diagonal 1, 2. That's a 3, 4, 5 of a 3. ABC 4. Where do you want to put it? You're not overlapping here. I think that will do, and I'm not going to obsess over that. so I need to replace that, sorry, I wasn't putting it in the right place. 1, 2, whether you have A, B, C, D, E, running triangle again, that might do. Like I said, I'm not going to obsess over that. You can get 5 waves down here, I'm sure of it. So we're correcting at primary degree, so this needs to be intermediate. So now it's just a series of 3 wave swings in theory, if we're building a triangle, and it looks like it. So can we pick them out? We're allowed 1 complex pattern within the subwave structure of a triangle. I think this is clearly 3 here. It's going to have to come down to minute. That's a bit iffy, but it looks more like 3 and 5. That's definitely 3 waves. That could be our complex here, double combination. At first glance, it looks like it. 1, 2, 3, 4, 5. A, B, C. Oh no, it just, I'm not sure actually. Yeah. I don't think there's A, B, C there unless that's smaller. A, B, 1, 2, 3, 4, 5, C. So W, X, A, B, C, Y for the moment. That looks like 5 into an A, B, 5 into a C. So that's be our finishing A, B, C. We probably didn't really need to force that complex into there. We could have probably just said this is a long A, B and a short C, and it could just all subdivide as zigzags. So we'll label that now. A, B, C, D, E for our B. That's our minor wave degree for the triangle. So in theory, if we've had 5 down here, we've had an interconnecting B wave, and now we'll have 5 down here. Okay, so it looks bearish, having put in a consolidating contracting triangle here just to break it. You don't do that to come out and then immediately reverse. You know, that would be the completion of the E here in a bullish triangle rather than the E being on the top for a bearish triangle. If you break it in these circumstances, the likelihood of popping straight back very low. Far more likely you'll do exactly what we've done, which is start the breakdown. Okay, so let's save the chart there. So all we can really do now is make some projections. Now it's possible that the initial idea we had at the beginning of the video, that this was the 3 and we're working on a 4, I don't think it's likely, but that is still a possibility that you've gone whole thing right. It's going to be a gigantic triangle, and at which point you can say this is A, this would be B, we're working on the C, D and E before going higher, but that doesn't really look very good to me, I don't think. Okay, so I'm more of the opinion that we've come down in A, we've come down in a B, we've got several months more of correcting to do. I don't think there's enough total despair here yet for people to have completely given up on it, but when people have completely given up on it and are very angry, very frustrated and very disappointed, that's more likely going to be the low, because when the last person who's going to sell has sold, that's the bottom. Because there's only buyers left, isn't there? Okay, so 1 to 1 is down here. This is in log. Obviously, there's no point measuring this in arithmetic, as it would be below 0. Way below 0. And we can't go to minus 192 bucks, can we? So there's absolutely no point measuring that in log scale. We have to measure it in measuring it in arithmetic scale. Sorry, we can only take a measurement in log. So that leaves us 2 options, doesn't it? Which is the log scale measurement is correct and we'll get a 1 to 1, or we'll get a 61.8% truncated C after a triangle B wave. That's pretty freaking unlikely, but we'll put it on the chart just in case. because we did almost get a 90% retracement here, so maybe we look at it something a little funky and unusual, but you never know. So we'll put the 61.8 here. Far less likely for that to be the case. We're more likely to find support in the short term and move back up than we are find support there from a probability perspective. And this is your 1-to-1 down here in log. Like that. It's just, it doesn't have to be super precise, does it? We know what it is. Lock well in place, and then lock this in place. And then throw a price on that. Price on that. And I guess we can label, is that 1, 2 of a smaller degree, 3, 4, 5, 1. I think that's probably a little excessive, so maybe 1, very shallow 2, 3, 4 and 5 to come. Now if this reverses and comes back in to this previous structure, we can reconsider what we're looking at here. Yeah, this could be that larger triangle where we've gone A, B would have to be to here now, C, D and E, and the whole thing could be bigger. But we'd have to see this reverse, take out this wave 2 top here. I mean, it could be that's just the 1 now, right? And we're going to go A, B, C into a 2, back into the triangle before breaking lower. We can't come back above this high though. So let's take that intermediate, let's take that minor wave E high for the moment and say this count becomes invalid above this point. We'd have to reconsider what we were looking at. Above 253, we'll just call that invalidation. So we're definitely looking at something else if we come back above there. And then this is 1-to-1. Okay. Right, there you go. We've slapped the count on GME. We've done some analysis here. So let's now have a look at how this 1-to-1 lines up with an expected retracement. Now, after 19,000% or whatever it was, I would expect not just a time-consuming retracement, I would expect a bloody deep one as well. You know, you've got a lot of what's the word? You know, speculative money in this trade, which has to come out in order for us to find a bottom. So let's just throw that up. I can find the exact low. I want the exact low and the exact high. Change this into a wave 2 template. Okay, well look at that for confluence. 1-to-1 is the golden ratio. 61.8% is our 1-to-1 measurement. So 61.8% retracement in log brings us to the golden ratio. I doubt we'll get a point of control around there, but if we think about market structure for a moment, it's a piece of previous resistance becoming support, isn't it? So lock that in place. And let's just have a quick look at that. So the previous market structure we've got to work with prior to this empty volume mood, volume on here but no market acceptance there will be in the volume profile. Sounding like Yoda there for a minute. Yeah, literally it's just empty space, isn't it? So that's market structure. That's a previous high, that's a previous high. So all of these highs here are all previous support or previous resistance becoming support. So what's this middle high here? B wave top. We just take that as a basic guess line for a support here, and we'll use that as a yellow. So you've got, let's just have a look at the, put a fixed profile on here for a minute, see what we get. So from the low to the high, No, to the current price data. Let's do that instead. So from below to present day. It's the same place, isn't it, you twerp? There's no point looking at it down there. So what about from the bottom of the 2? Does that change things? Yeah, it's in amongst all this noise, right? Here is where we see another point of control. So that's the only area of market acceptance on the way down, because everything else is just there's nothing here, is there? You know, there's nothing to really provide support. Previous low. All right, we'll mark the previous low. See if that's significant in any way. It's somewhere around the 61.8. We'll check it in arithmetic scale as well. So we'll mark that as the previous low, and we'll put a tag on that as well. The chart's getting a little too busy now, to be honest. Previous low. There we go. That's that little point. That's that little notch in the volume there. This still looks like the best candidate. Previous market acceptance here, 61.8% log ratio fallback, 1-to-1 parity, A equals C equals A, all in this support box down here at 20.28. Where we're trading currently 114.94 is the pre-market price, so that's going to be a pretty brutal sell-off if that plays out. We've had the breakdown on the day time frame of the moving averages now. Let's have a quick look. 60 hasn't crossed the 250 yet, so it will be interesting to see what happens there, because that could be signal of a local low, and if we reverse sometime soon, then maybe this won't play out and there's some larger pattern at play here. But we're below the 10, we're below the 20. Price has now moved below the green line here, which is the long-term 250 exponential moving average. Broken through that. The 10 and the 20 have crossed over. Through the 250, 60 is closing down with the price below it. It's all fundamentally bearish in the short term. Let's have a look at our momentum indicators here on the weekly time frame. Back below the zero bound on the MACD, into oversold territory on the RSI. So it is worth keeping your eye out for a reversal, because if it isn't this incredibly bearish scenario, then maybe that 3-4 is an alternate possibility, or maybe even a 1-2, but I can't see that myself at the moment. But you never know, if we come back above this invalidation point, then this is wrong and we need to reconsider. But tricky chart. A lot of price move, very little data to work with, so just doing the best I can. But that looks like that could potentially come down quite happily, doesn't it? Switch into arithmetic scale, and we'll leave that extended. So now let's measure the retracement in arithmetic. So we've got our fib retracement. The 678.6 is here. Oh, there's another piece of confluence, guys. So that's the 61.8. 61.8 in amongst this previous structure here. That was to be just above the previous low. 89% retracement. It looks like we're going to get significantly more than that, though, doesn't it? Like it's just going to completely collapse. Oh well, it could do. I mean, it looks like a bubble. I don't know if you've ever seen the Wall Street cheat sheet before. If you haven't, you should go look it up. But basically, it explains the psychology of a bubble. How you end up here in euphoria, and then you go through, denial, anger, despair, capitulation, roughly 99% or 90 to 90% sell up, 99% sell off, and then the market recovers. Okay, but this so far is kind of looking like that, isn't it? Potentially. Alright then, so I'm going to leave it there. For GME, we're only going to have a very quick look at AMC now, since I've been waffling on for so long. 46 minutes. Okay. do we really have time to look at it? I tell you what, I'm going to save that for a different day. We're just going to say GME today, and I will adjust the intro accordingly. Let's tidy this up a little bit, turn off all these little indicators, save the chart here. Alright guys, thank you very much for joining me on this technical analysis of GME, which is Gamestop Corporation. If you're new to the channel and you've liked what you've seen, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. Feel free to leave us a comment in the comment section below, but please don't come at me with hate for my analysis. I'm just trying to do my job. Yeah, if you're interested in becoming a patron, follow the link in the description box below to the Green Star Trading Patreon. Have a read of the different tiers. If anything takes your fancy, feel free to sign up. We are now past the middle point of the month, so I would recommend maybe waiting until the start of February, as you're only going to get a couple of weeks before you get charged. So maybe consider waiting until the start of next month. But if you can't wait to join and you want to give us a month's worth of pay for 2 weeks of work, I'm happy to accept it. Alright then guys, take care of yourself, and I will be back with you shortly. All the best. Bye bye.